Let's put the spotlight on the wires and cable space now. In fact, we should get some of these stocks up. Let's see if there's any recovery. KEI, Polycab, yesterday these stocks are absolutely slammed, bombed out because of the fact that along with UltraTech, now we have another giant entering the wires and cable space, and that is the Adani Group. So what could potential impact be? We have Praveen Sahay, Vice President Institutional Research at PL Capital Group, joining in. Praveen, good to have you on. So, I'm just going back and reiterating what these companies told us after the UltraTech entry. We remember the whole price damage and the drama that happened. And then there were the conference calls, analyst calls. And the incumbents claim that gaining scale so quickly will not be possible, even for a giant like UltraTech. But realistically, what is the disruption that you would anticipate now that we have two biggies in the fray?
Yeah, thank you. Definitely the entry of the new entrant, and that's the conglomerate. Definitely the way forward in the long term will impact. But also we had to consider that this sector is growing at a 12.4% CAGR. And that is also giving a big opportunity the way forward for all the players, I believe. So just to give you some numbers, like currently 84,500 odd crore of wire and cable, it will reach by FY29 to around 1,52,000 odd crore. That will generate an incremental 67,000 odd crore of revenue. So, and also if you look at the current position of the top 5 players, top 7 players, if I look at, they account 54% of the entire market. And for this 67,000 odd crore of a revenue, sector requires around 15,000 odd crore of a capex over the next 4 years. So, and so far, top 5 players has announced yearly, clubbing together all 5 players, yearly run rate for a capex is around 2,500, 2,600 odd crore. So still there is a room for a new entrant to enter, explore this opportunity. And I am in a view what the companies are saying, that's definitely there would be some timeline, some 18 to 24 months for the commissioning of their facilities. Post that the approval process is quite lengthy, especially in the cable business. So at least a 3-4 years time frame required to come to an optimal utilization of what they are announcing right now. And they had also communicated, especially the UltraTech has already communicated about these things. So I think the opportunity is going to be big, and the entry of these players will adjust in that without hampering the large players like of a KEI or Polycab growth rate. But one thing is for sure, and that's what's happening right now, is a de-rating in the sector. So pre-COVID, if you look at these sectors from 16 to 2019, traded at around 17 times. Now the post-COVID, and when, say, the example of KEI delivered a 42% of earnings CAGR. Post the COVID, 21 to 24, earnings CAGR were around 29%, and the stock got re-rated and reached from 17 times to 50 times. And now the re-rating because of a new entrant is happening, and that's I believe this sector to be in the range of around 35-40 times, not more than that. And right now the Polycab or KEI reduced to around FY27, 27 or 28 times. So definitely the correction is large. Yeah, go ahead.
No. So my question was, this correction is large, but people are of the view that this correction has been done much ahead of the anticipated disruption, and the valuation multiple correction has already happened, and maybe perhaps it's the time to buy. Would you concur with that view?
Yes, definitely. I am with you. Because as I said, this sector where the growth rate, the earning growth rate is expected to be range of around 23-24% the way forward. And also the sector is as a whole growing at a 12.5-13%. These companies already did capex. Their guidance is nearly around 17 to 20% of growth in their top line. So sector growth is intact, ROC profile around 25-27%. I believe it should be in the range of around 35 to 40 times, which has already reached to a 27-28 times. So I will be buyer over here.
Well, the counter argument for that is these entrants are big players, and in their overall scheme of things, cable and wires don't account for too much, right? So for them to wipe others out, all it would take is for them to incur EBITDA losses of a couple of years, which will not account for too much. But for the others, that would be a big dent. Would you believe that in light of that, there could be further downside from levels that the street is anticipating right now?
So what you're saying is definitely they can do, but these, as I said, wire entry or the LT cable entry is quite comparatively easier as compared of the ST cable or extra high voltage cable entry, where you required a very lengthy process of approval for your product and the plant wise. It takes time. It's not a difficult process, but it takes time, very lengthy process. And that is why the sector peers are saying, and we are also in the view, it will take a time, at least 3-4 years to come in the market and dent. And definitely that is going to derate, and what the sector got derated actually. So even immediate effect on the next 2 years time frame on the financial, we are not in a view of that.
All right, and your top picks would be?
In the wire and cable, definitely the KEI and the Polycab, after so much of a correction, and they reached to a 27-28 times of FY27 earnings, we are liking.
All right, take that point. Thank you so much, Praveen, for joining in and setting us up for, looking at this sector now. You believe that maybe the valuation derating has already happened and this dip could perhaps be a buying opportunity.